So this presentation is pretty much just going through some of the outcomes of our 19 billion report. So talking about kind of closing the gap and the 19 billion in unclaimed benefits and its impacts that it's having on social outcomes. So today we have presenting our client service manager, Abigail Everett, and our founder and director, Devin Delaney. So they're going to bring you through the findings of the report and I guess just some of the technology and the systems that we're using to try and close that gap. So over to you, Devin.
Brilliant. Well, again, great to have so many of you on the call. I can see a few people have joined just during that introductory bit. So we're just dropping in the chat who we are and where we're from, just so Abby and I have a sense of who we've got on the call. But yeah, we're here to talk about the amount of support that goes unclaimed each year and its impact, both the negative impacts in it going unclaimed, but also more importantly, I think the positive impacts you can have on your communities if you do help people to access that. So I'm going to start. The first half of the presentation will be a bit about the general policy context in which this is operating and why we thought it would be helpful to update the work on the amount of support that goes unclaimed. And Abby, in the second half of the talk, is going to talk about practical steps that we've helped a range of organizations with to help their customers or residents access that unclaimed support. So if you move forward, Christian. Quick introduction to policy and practice and myself. So I started policy and practice 10 years ago, actually. We had our 10-year anniversary just a couple of months ago. Starting out really because I felt the benefit calculators that were out there at the moment, they've improved considerably, I think, largely because we've come onto the scene. But back then, you basically needed to be an expert in social security to be able to use them. And I'd been spending a lot of time in Whitehall. I worked on universal credit, actually, in terms of sort of my background, after having been unemployed myself about 15 years ago and having to navigate going to claim job seekers allowance, the job centre not telling me about housing benefit for 8 weeks, getting a job and seeing what happens if you're pulling pints behind a bar as your first job, and seeing all of that money deducted pound for pound, so really being not sufficiently financially better off. So that's why I started to got interested in social security. That led to a role at the Centre for Social Justice. And again, as I was saying, I left that world because I felt there was a big gap in how policies developed and how it's communicated to people. So the benefit calculators that were there at the time, I felt like you basically had to be an expert in social security to be able to use them. And the original vision was just to build a better benefit calculator and see what impact that could have on just take up people getting through to the end. And we sort of tried to keep that vision of making it simple and easy to use while making it, I think, the most comprehensive piece of software for social security that is out there in terms of its coverage. And I guess that the backdrop to this is the first 10 years, it was like taking a horse to water. These are the people who are eligible for support. You can use that through our benefits calculator. We developed a new service called Lift, which uses benefits administration data to proactively identify people who are eligible for support but missing out. And Abby will talk a bit more about that. But I guess the next 10 years is all about from taking a horse to water, identifying people who are eligible, to making them drink, i.e. reducing the friction that people face in accessing that support. And there's some incredible initiatives that we've already kicked off, from local authorities automatically writing letters to every single household that they know to be eligible for pension credit but missing out, to Anglian Water, if you're a Northumbrian, a number of other water companies, if you're on gov.uk using our Better Off calculator and it identifies you're in an Anglian Water area, you can automatically port all of that information across into their social tariff application system. So you're 1, 2, 3 clicks away from having that reduction applied to your bill, rather than having to go off and apply separately to your water company, or sometimes your water company and your sewerage company, because sometimes it's run separately. And we've been bridging those divides in those sectors, and we'd love to be doing that much more. So a very short introduction to that and the vision and the goal over the next 10 years. The policy context doesn't need a great deal of introduction. It's been on the news the whole time, but I'll go through it anyway, and just to really highlight how we're able to say a bit more about it. Christian, maybe just skip this. I think I've given a broad overview of the agenda already. As I said, it doesn't need a great deal of introduction. The cost of living crisis really points out that people are struggling. I guess what this slide says is we're able to look at this in a slightly different way. So our specialism that we've developed, as well as the Better Off calculator, the benefit calculator on gov.uk, we've developed this second service called Lift, which uses benefits administration data to help local authorities identify households who are struggling financially, to help them better target discretionary housing payments, identify people missing out on pension credit, a whole range of other use cases there. One of those use cases is to use that administrative data, which is updated and shared monthly with DWP, to identify trends much more quickly and easily than we're used to. And that became particularly relevant during the pandemic and the cost of living crisis, when actually using the data sets on poverty from the Family Resources Survey, which are typically 1 year to 2 years old, you needed sort of month by month updates. So we're using the administrative data to report on a monthly basis to local authorities what's happening in their local area. When we pulled all of that together, we looked at the cost of living crisis, both to date and then forecasting this into the future. This is slightly dated analysis, in fact. And what we found was that looking at over 100,000 households on low incomes, that 17.5% of those were in relative poverty before the cost of living crisis really hit. And that jumped to 19% when the impact of the energy price shock and other shocks kind of came into effect. That was 1 million more people in relative income poverty due to the cost of living crisis. We're also able to look at the impact on arrears. So we collect arrears data from local authorities, and what we found was that there were 18.2% of the total households we were looking after. We now work with over 60 councils, so it's a pretty representative sample. 18.2% of that low-income cohort were in council tax arrears. That jumped to 24.7% 2 years later. So that's kind of the impact of the tail end of the pandemic and the first year of the cost of living crisis. So quite significant impacts. And again, households have been protected from some of that collections activity during the pandemic. That's starting to obviously change now. We haven't seen the impact of that filter through from speaking with the collection rates are still holding up, but I think there's a very unequal impact of that. So collection rates will be holding up for a large number of households. It's for those that it isn't holding up for where the consequences will be most significant. I think. I think you've gone back. One more slide. Thanks. Perfect. So support is. Oh, there, that one. Support is withdrawn as living costs fall. I guess this is about the outlook, and again, it's not too positive. The only positive to say is, talking to local authorities and utility companies and the others that we work with, is that collection rates are holding up, so people are finding a way through this. But again, you can't see some of the knock-on consequences of them finding money to pay their bills, having perhaps worse impacts on health or educational outcomes elsewhere. So living costs are falling. We're about to see a fall in the energy price cap for the first time in 2 years, still to well above. I still think it'll be 70 to 80% above what we were used to before the cost of living crisis hit. So it'll still be a significant, households are still going to feel a significant price shock. So although it's falling, it's still going to be an increase in cost to what people are used to. And at the same time, you're seeing support fall away. So households were getting a £400 rebate on their energy bills. That's going or gone. I'm trying to think about what the date is today. June. Yeah, gone. CPI is, inflation is remaining stubbornly high. You can see that through rising interest rates, which is again going to squeeze incomes. We've still got the local housing allowance frozen. So although benefits were uprated, thankfully, by 10.1%, the local housing allowance rates were frozen, which means that private renters, if they are seeing their rents go up, are going to find that gap from somewhere. Council tax liability is going up by 5% in almost all areas. So at the same time, you're seeing the support that's being announced spread across 18 months or falling away, like the energy rebate, while costs continue to go up. So I don't think these challenges around cost of living, just because energy costs are falling now, I don't think these challenges that households are facing are going to go away anytime soon, I'm sorry to say. So that's what the outlook is. Again, forward. Please, Kristen. It's worthwhile saying what the impacts of these are, and I'll say a bit more about the knock-on consequence of this. And again, Abby will go on to talk about what councils are doing to, councils and other organisations are doing to mitigate those impacts. So firstly, just a few quotes. So there are more and more numbers of people approaching us for homelessness in the private rented sector. We actually held a reception at the House of Lords with both the Minister for Employment, Guy Opperman, and the Shadow Secretary of State, Jonathan Ashworth. And I think one of the reasons we hold these things is because they get to hear from those on the front line, the clients that we work with. So a lot of those attended were able to share some of their messages back to ministers. And I think the headline was, they really haven't seen it this bad from a welfare and advice perspective. And again, do drop in the chat if you're seeing similar or even different messages, because it's, again, this is part of what the idea behind policy and practice was. We get the feedback from the front line, from the practitioners, make sure that has a voice in policy, and we also try and make sure policy development has an awareness of what needs to happen to make that policy as effective as possible on the front line. A lot more people who are in work are seeking help, and again, that's not too surprising given the cost of living affects everyone, whether or not you are in work. Spoke to customers today, working 30 hours a week, lives on her own. Bills have jumped from £80 a month to £188 a month. Doesn't qualify for benefits, so those just outside the benefit system, or possibly they may qualify for some kind of support, but they're just not aware of it or don't know how to access that. Demand across all services increased drastically. Local authorities are seeing decreases in both cash and physical goods donations. You'll see the impact on adult social care. So initially, more people being unable to pay for care today. And in the years ahead, poverty today leads to poorer health later. So recognizing both the short-term and long-term impacts of some of these challenges. So again, context is quite bleak. Christian, if you wouldn't mind just posting a link to the report in the chat so people can download it. We published a report recently, missing out £19 billion of support that goes unclaimed each year. It's well worth a read. We felt that these statistics needed updating, partly because this universal credit has worked to simplify social security for the core benefits, so unemployment support, income support, employment support allowance, housing support, things like childcare, all kind of wrapped into one application. But actually, as the cost of living crisis has grown, you're seeing a huge fragmentation of support outside of that. So discretionary payment schemes, household support fund, DHPs. We're seeing a big increase in social tariffs or support for people with their day-to-day utility bills. I think utility companies are being expected to administer that themselves. And I wonder whether the best place for that isn't in helping people access their core social security benefits and support. As well as the £19 billion of support that goes unclaimed. One of the biggest gaps we see is how much energy, time goes into identifying people who are missing out, helping them to claim, processing those claims. We reckon that's about £12 billion a year being spent across largely the public sector, but also the private sector too, in administering that support. And one of the things we're trying to do, as I mentioned at the start, making that horse drink, is reduce those costs of administration, both for the customer applying, so that kind of load of all the things you have to do and apply again and again is lessened, while also reducing costs for the administering organization. So how do you go about to how do you ensure people are claiming all of the support they're eligible for? Again, really interesting discussion if we've got time to get into. And again, I welcome, I guess, your take in the chat. One of the things we're trying to do is deal with the core barriers to that support going unclaimed and reducing the friction people face in applying for that. We can't do that ourselves. We need people on the front line to help. So one of those things is to reduce the stigma, encouraging people to claim, even if they can only access 20p of universal credit. That opens up access to the cost of living payments. For example, it can be a gateway to so much other support. So cost of living payments have been worth around just under £1,000 in the last 12 months. So it would have been worthwhile, right? Even if you were getting 20p of universal credit, you would have got those payments. We've seen that increasing fragmentation of support. That is where we do help, and again, Abby will talk a bit more about that. Raising awareness. I think one of the key elements that we do really good conversations with utility companies at the moment, recognizing that historically helping someone just to access a social tariff with their water bill or their energy bill might help them with their energy bill today, but fundamentally what you know is that household has a bigger problem in meeting their repayment. So if you can help them at the same time to access wider social security support, if the water company can help them to apply for council tax support at the same time, or the energy company can help them to get a discount on their energy bill and their water bill at the same time, that helps everyone who's struggling to collect from that household, and most importantly, it helps the household itself. So making those connections happen between the public sector and the private sector is, I think, a really powerful sort of win-win-win all round. Again, helping people access that unclaimed support on its own isn't going to be enough. I was at a select committee last week on the right level of on the adequacy or otherwise of social security, and I think, you know, our evidence is social security on real terms worth 7.5% less than they were 10 years ago. That is, people are going to be feeling that, and again, the impacts are felt quite differently across different households. So you can't do it just by accessing the 19 billion pounds of support. You do need to increase the gap, meet those gaps in social security, and I do think social security universal credit is probably the best place to do that, rather than developing new schemes elsewhere. At the same time, those schemes do exist, and helping people access that is something you can practically do right now. If we move forward, Kristin, lots more to say on that. It's probably a good point to actually, I'll take the next couple, Abby. Again, Abby has led a lot of our work on pension credit, so I feel like I'm stealing her thunder here. But it's worthwhile mentioning some of the work's been recognised elsewhere. So Independent Age picked up a case study of the work that we did in Islington. It doesn't reference its policy and practice that did the work there, but I think it's a really good case study. Kristin, you might be able to dig out a link to that report as well, and let people know what page that case study's on. Effectively, we found they were able to use LIFT to proactively identify households missing out on pension credit. And we've just done some analysis today, actually, that Abby shared with us, that showed essentially right after they ran a data targeted campaign, that's when you saw the pension credit claims go up straight after. So again, a direct link between using a data-led approach to targeting households and seeing the take-up of pension credit go up. Again, and you can see how much is missing out in your local area too. Abby will take you through how to do that in a moment. If we move forward, I think just a couple more slides for me. I think it's about the impact of that. So if you can help people access that support, it isn't just the benefits aren't just financial. So we know that we did some work with Sutton looking at the relationship between households on a low income and referrals to children's services, and we found that households who are facing a cash shortfall were twice as likely to be referred to children's social care. Again, a direct link between poverty and fiscal impacts on councils. So being able to target preventative support can help to prevent re-referrals. Now, it's difficult to use this data operationally. The legal gateway doesn't exist to do that. And I think one of the things we're looking to do is work with partners like you on this call to help build the case and keep the pressure on government to again look at whether or not there's a good case to allow more data to be used by local authorities to help support households much more than they're currently able to do. Again, it's really governance rather than technical capability that allows that's limiting the impact of, say, universal credit data. I know we've got someone from DWP on the call, and one of the long conversations we've been involved in with DWP is councils get data on all households eligible for council tax support on universal credit. But actually, if DWP were able to share data on all of those households, a lot of those councils are very well set up to use that wider data set to carry out more of that preventative work. For example, you know, a child being placed back with their family, you know, if you can alleviate the financial stresses on that family, what impact does that then have on re-referrals to children's social care? We've just secured a grant from Nuffield to explore this work a little bit further. So if you're interested in that, feel free to drop us a line. And next slide. I think this is a good place to hand over. I was going to say the same thing on adult social care. Actually, I'll just end on that and say, again, looking at the relationship between income and adult social care impacts in terms of lower care costs in the future is quite significant. But again, Abby might touch on that, and I've probably stolen enough of her thunder already. So onto the practice side of what councils and others can do about it. Over to you, Abby.
Absolutely, thank you, Devin. Yeah, and I think just touching on that kind of social care link, I think there was a study by Independent Age, which might have been referenced in the slides, where they found that between 3 billion and 5 billion of expenditure on health and social care is associated directly with being on lower incomes due to not claiming pension credit. And I thought when we were doing some of our research, that was a really interesting study to find, just to see kind of another organisation looking to put those links between not claiming benefits and the impact on people and local authorities across the country. But yeah, I'm here to talk to you a bit more about the practice and what we do at Policy and Practice, and how we work with other organisations to help people to claim benefits that they're entitled to, and how it goes a little bit further than that as well. So I'll first talk about LIFT, which is our low income family tracker. So this is a platform which takes in local authority benefits administration data and runs it through our policy engine, a similar policy engine to that of the Better Off calculator, and helps to identify households who are struggling, households who are in a cash shortfall and low financial resilience, and also those eligible for support that they're not already claiming. So then we can identify to those local authorities, these are households that are struggling, and also a proportion of them are eligible for certain benefits that they're not claiming. Why don't you support them to claim those benefits, and also maybe those who aren't eligible, support them in other means through kind of other discretionary support that local authorities have access to. And I'll go through a couple of the case studies that we have around that as well, just to kind of illustrate the impact. So then local authorities can explore those households on LIFT and run targeted take-up campaigns. So LIFT really aims to identify households, engage with them through support, and help to claim benefits, and then track the impact of those campaigns on improving people's financial and social stability, but also long-term benefits like allowing people to stay in their home for longer, allowing greater independence, reducing social isolation, and things like that. So we pull local authority data sets on low-income families, including housing benefits, CTR, as well as universal credit, alongside other data sets on arrears, discretionary housing payments, overpayments, and similar things. As I said, we run that through the policy engine, and we aim to show, instead of looking at the impacts of one policy on an entire population, we look at the impact of all policies on one person or one household, both now and modelled for the future, and future policy changes. So thinking, for example, with the cost of living, we model what the energy price cap might mean for individuals, and also who might be missing out on support that they're eligible for. And then local authorities can proactively track the support that they've given to people and engage with them and see what other impacts they can have. Moving on to the next slide. I'll show you some case studies from local authorities that we work with around the country, and also kind of different use cases that people have used LIFT for, and then I'll move on to the calculator. So one of the case studies I'll share is Islington Council. They've run a number of successful pension credit campaigns. So they've run 3 campaigns, have identified over 800 households who are eligible for and not claiming pension credit, and that's all between 2020 and 2022. They've now, and Devon kind of referenced what I was talking about before, we shared it in a team meeting this morning, they've had over 500 of those households go on to claim pension credit, and it's obviously a massive take-up figure and quite hard to kind of visualise and identify, but around 62% have confirmed to be taking up pension credit after all of these campaigns. And we can see the impact of not just trying to reach out to them once, but reaching out to some people multiple times. And Devon was saying how claiming these benefits, even if you're only getting a small amount, which the average annual amount for pension credit is around £3,500 per year. But even if you only get a small amount of that support, you're eligible then for so much other support. It's a gateway benefit that gets you access to those cost of living payments, gets you access to a whole host of other benefits as well. So this has led in Islington Council to over 1.6 million annually claimed, and nearly £1 million in total backdated benefits and cost of living payments as well. If we look at the impact of this campaign over 6 years, if we're thinking about pension credit being paid for every year for the rest of that individual or the household's life, these campaigns can bring economic benefits to over 9.6 million in Islington. So that's, I know for a fact that's even higher now. These numbers haven't been updated since the last time we did this presentation, and the way that we've been able to do it with LIFT, as we get this data in every month, we can update the take-up figures for each of these campaigns as well. So it's really rewarding and beneficial to be able to see the the impact, and local authorities can show that as well. If we move on to the next slide, I'll also share another case study of support that Lift's been able to help to distribute. So Policy and Practice were nominated for the Digital Impact category of the LGC Awards back in 2022 for this work that we did helping local authorities to distribute their household support fund using Lift. So local authorities had a 6-month time limit to spend £421 million to support households following the pandemic. Lift helped 9 local authorities to distribute £18.5 million to their most vulnerable households. This was up to 149,000 households who were supported in this data-driven approach, helping these vulnerable households as quickly as possible. So Lift allowed local authorities to look at their data sets and quickly identify and highlight anyone who might be in a cash shortfall or soon to be in one, alongside other metrics like food poverty, water poverty, fuel poverty, relative poverty. And then this allocation of the household support fund allowed them to not need to have application forms for every single person who they allocated support to, and also helped the clients then to manage the administrative burden of distributing so much money so quickly to vulnerable households after the pandemic. And this just helped to make the process a lot more efficient, a lot more painless. The final case study I'll quickly share with you in terms of Lift is one that I've worked on quite closely. Kristen, if we could go to the next slide. It's the London-wide pension credit take-up campaign that we've been running. It was funded by the Greater London Authority and has been supported by London Councils and Age UK. And we've worked with, it says 16 there, it's actually 18 local authorities around London to identify households who are eligible for and not claiming pension credit and automatically send them a letter. We sent 2 letters to each claimant if they hadn't claimed after the first letter. So we sent over 11,800 letters to over 7,200 households. And actually this number's risen as well. So over 1,400 households have now claimed pension credit, and we're expecting to see that number rise even further. And we're actually seeing the average annual pension credit value per household of over £3.6 thousand and a total value so far of over £5.3 million in a year. And this was just bringing on all local authority, housing benefit and council tax support data and running that through the engine to identify people eligible and not claiming for the benefit, and then sending them a letter and signposting either to the local authority for further support or to kind of voluntary sector organisations, Age UK, and similar to that. So it's been a really great collaboration of a project between so many local authorities, and it's definitely something that we think can be replicated across different local authorities as well, and would be really keen to discuss the ability to do that as well. It was kind of interesting as well, taking it from the individual local authority level and scaling it up to a regional approach and seeing how we could make automations and cost savings in terms of the time spent running those campaigns on a local authority level. That's been really, really valuable as well. If we go on to the next page, we estimated how much pension credit is unclaimed in each local authority area. So we've, as Policy and Practice and the local authorities that we work with, have been able to have over £100 million of confirmed pension credit take up over 50 local authorities. And we thought it'd be really interesting for people to be able to have a look at what entitlement there might be in each local authority, and then also what we can identify, what we estimate we could identify using your data, and what each local authority would be able to achieve if they ran a similar data-led targeted campaign. So if you go to the next slide, we've posted the URL for where this information sits. So we've you can go to policyandpractice.co.uk/pension-credit, and this will bring up the spreadsheet. If you want to have a look at it now, you can pull up the local authority that you're living in. I think you might be surprised about how much pension credit we think goes unclaimed in each local authority area. So there's the example of Birmingham Council on this screen here, and we think that a data-led campaign in Birmingham using benefits administration data would identify over 1,000 households who could and should be claiming pension credit, And if we say that around 400 households take up pension credit, the value of this, just in terms of pension credit claimed, would be over £1 million. And this is not including all of the other support that people might be eligible for, and also kind of the cost avoidance that we were talking about before, in terms of being able to have people access all those other benefits and then staying more independent for longer. We've also done similar work internally that we were just talking about this morning.
Sorry, Abby. Just worthwhile mentioning, you know, we've got colleagues here from Manchester, Exeter, Wigan, I think a few other places too. If you just go to that URL and just type in your local authority, you can see how much is missing out. You'd be missing out on in Exeter or Wigan. I know, Chris, I think we've worked together before, and I think one of the big differences between perhaps where we were 4 or 5 years ago when we did some similar work for Exeter is, as well as going from identifying those missing out, is now much easier, a couple of button clicks, to then contact those households, as Abby's just been saying. So again, those letters can be automated. And again, you see the kind of levels of impact in terms of proportion of people responding to that campaign across the board. Again, it's a good letter that we've refined from doing the work with so many different local authorities. So it's well worth you guys visiting that URL and seeing the impacts in your local area. Sorry, Abby, to cut in, but I just wanted to make sure we didn't gloss over that.
No, that's great, absolutely. And yeah, no, absolutely makes sense. And I think there was a question in there about other benefits. And we've done a piece of work internally where we've estimated the economic and fiscal impact of running a whole host of other campaigns. So that could be around reducing homelessness, increasing other benefits take up, free school meals, lowering social care costs, improve children's outcomes, and things like that. So if you're interested in finding a bit more information about that, and if you'd like a report specifically for your local authority, then come and talk to us. We'll have our contact details at the end of the presentation, and we'd love to have that conversation with yourselves as well. So the pension credit version is on the website, and that's the one that we've published so far, but we also are doing work to identify the eligibility for other benefits in local authorities as well.
And just while we're on it, there's a question on attendance allowance that popped up, and I know you've done a bit on that with this campaign.
Yeah, so in addition to the pension credit letter, we also included information on attendance allowance on that letter as well. I can share a template later on if that's helpful for people, but we included the attendance allowance helpline, and also kind of that conversation can be picked up by the local authorities. So attendance allowance is a bit more difficult than pension credit is to say whether you are definitely eligible or not, but I know local authorities, the clients that we have, some have run campaigns specifically getting in touch with people who are single, over 80, and not claiming other disability benefits to try and identify whether they might be eligible, and just kind of doing that initial reach out to make contact with those households and see if they are eligible. And if not, I think a lot of local authorities are kind of the opinion of every contact that you have with a household, let's make it count. Let's have that conversation about, okay, you might not be eligible for pension credit, but maybe you're eligible for attendance allowance, maybe you're eligible for something else. And even just having that contact can help to reduce any social isolation that these households might be facing at that given time. So it was definitely something that we included in the letter, and I'm hopeful that we can do a bit of analysis of whether that enabled people to take up attendance allowance alongside pension credit as well.
And actually, on that theme, again, I feel like we should just do the Q&A on this bit before moving on. Ed's just asked, and Ed, feel free to ask the question yourself if I get it wrong. So, identifying lots of people on pension credit via LIFT, but who does the time-consuming work of actually helping those households make those claims? If it's the voluntary sector, they pay for referrals, or is this generating demand for independent advice services, which is unfunded? I know that was a big part of the London campaign in terms of how different authorities decided to solve that particular problem.
Yeah, so different local authorities had different contact details on there depending on kind of their internal resource and also their relationship with their voluntary sector partners. So as we say, we're very grateful that Age UK also were supportive of the campaign and offered some support going forward as well. But most local authorities had their own local authority contact details to their benefits and welfare team or their cost of living support team, if that was helpful. Otherwise, some local authorities had their commission partners in their Age UK, their local Age UK centres as well. But yeah, I think in terms of talking about resources that were available, that was definitely a question, and is something that we're going to evaluate as well in terms of the impact of having different referral organisations on board.
Ed, does that answer your question? And do you want to come in and elaborate at all before we move on?
I don't know if you can hear me.
Yep.
My connection's really poor. Can you hear me?
Yep.
Yeah.
Yeah. No, thanks for addressing the question. I know I work for a local citizens advice, just really quickly, and we know that we get a lot of kind of unfunded demand from all sorts of places, and this is kind of one of them. And you're right, you have some commission providers with local authorities, but you also have a lot of local authorities where you have an independent advice sector which is struggling in terms of capacity, and it's a really good idea to support these people, identify these people and support them as best you can. But obviously it can put quite a strain on the voluntary sector sometimes. So thanks for addressing that question.
I mean, my view as we move on, and I'll let Abby move on to the next slide next. But my view on that point, Ed, is councils absolutely should fund, or other, there should be funding available for that work. Absolutely. I suppose I don't really mind too much where it comes from. I think what we find through LIFT is a lot of people are able to, with a letter, get some of the support they need from friends and family to complete that, because it just prompts that action. And it's for those that can't, and some of the proactive outreach work that then needs to sometimes be carried out. So I know Coventry did a similar campaign, and one of the things they did is, or one of the things we're trialing the cost effectiveness of, is following the letter. If you do follow that up with a phone call, what impact does that then have? And should that phone call be done by, say, an independent advice provider or by the local authority? And does that make any kind of difference? So these are all questions that, again, are unanswered, but we've got the evidence to be able to answer them. It's just finding the time to do the work. Back to you, Abby.
Absolutely. Yeah, and great question as well. It's definitely something that when we're making when we're having conversations about doing future campaigns in this way, we've had those independent partners, the third sector organisations, on board and talking about what resourcing and funding they would need to be able to support the campaign. So definitely a conversation to take forward if these campaigns were to go forward in different local authority areas. I'll quickly move on. I'm conscious of the time. We also, Policy and Practice, run one of the benefit calculators linked to on gov.uk, as Devon mentioned before. So the Better Off calculator helps individuals and organisations who are working with individuals to identify what support they might be eligible for and not claiming. And in the context of £19 billion of benefits and other support unclaimed, it can really help to identify what support people might be eligible for now, and also how changes in someone's situation might impact their income and their budget, and as kind of claiming additional benefits or working extra hours and the impact that might have on someone's financial situation. So 2 million people use this calculator every year via gov.uk. We also work with a whole host of organisations who license the calculator to work with their customers. So that can be citizens advice, local authorities, housing associations, utilities companies, a whole list of different organisations. We also signpost support to people using the calculator to help to identify eligibility to other benefits. And really, we want to improve how people apply for the support that they're eligible for, and hopefully, as we were kind of saying in that conversation there, reduce the resource and support needed from local authorities and other organisations by making the system simple to understand for individuals on their own. Kind of in that vein, on the next slide, there's some more information about how we signpost to other support. So there's this whole list on the left hand side, which I'm not imagining people are going to be able to read from this far away, but it essentially shows other support that we think people might be eligible for, and kind of links to all the different websites and application forms that it might be helpful for people to see. Specifically, our report on unclaimed benefits that we were sharing earlier identified that over 5.7 million households are eligible for and not claiming their water social tariffs. So this is an estimated value of £900 million in unclaimed support. So I wanted to share this example because we've worked with water companies, including Anglian Water, to be able to show when people are eligible for support from their water company, and also directly signpost them to the assessment the assessment page to do this assessment and identify what they're eligible for. So hopefully just improving that journey and helping people to apply for all the benefits that they're entitled to, just by doing this calculation and identifying that they're in the right area with the right conditions to apply for this. Moving on, hopefully I've alluded to this and we've alluded to this throughout the presentation, but we know that the impact of these campaigns and this engagement goes much further than just the financial stability, although this is obviously really important to individuals and local authorities and other organisations. Some benefits are gateway benefits, but also having this contact with different organisations can reduce social isolation, allow people to get in contact about other things that they are struggling with and other support that they might be eligible for. And as I said before, local authority data can also be helped to distribute household support funds, identify households who are struggling but maybe not eligible for other benefits, maybe with low EPC ratings, which we've just brought into LIFT, that's energy performance certificate ratings, as well as households experiencing all types of poverty, and how we can target support to them. So we just included a couple of the quotes from residents on the right hand side there, just about the impact that this support can have that might go further than just the financial support. On the next slide, I'll just kind of have a bit of a summary in terms of what we think that increasing take-up of unclaimed support can do for both residents and for councils. It really can help to deliver savings to local authorities in all different areas, and also huge benefits to the individuals as well. So adult social care savings, it can be improving outcomes, allowing people to be independent for longer through that increased income, and benefits for carers, for example. Education wise, free school meals take up, pupil premium, saving money on providing meals for children going to school. Also homelessness prevention, reducing arrears and vulnerability homelessness has a huge impact both on individuals and local authorities. If you can increase people's incomes and also target support to those who might be vulnerable, that can really help as well. And also finally arrears, helping people to pay back to claim extra support they're entitled to, can help them to pay back their council tax and rent arrears, which obviously has benefits to the local authority as well. So hopefully finished ever so slightly late, but our contact details are on that final slide there. If we'd have time to stick around if anyone has any further questions, but yeah, that's it from me. Thank you, everyone.
Thanks so much, Abby. And Devin as well. I think even like being so close to the work, it's even so fascinating for me, just even seeing the numbers, especially around pension credit. Like I think they just speak for themselves, the fantastic work being done. I am conscious that it's 11:46, so if anyone does need to jump off and go to another call, don't worry. I put my email in the chat if you want to contact me directly, and then I can pass you on to Abby or Devin. But if anyone's happy to stay on, like we're happy to take any questions. It's a small enough group, so if anyone wants to like raise their hand if they have a question, or if not, I can just go through the chat, whatever people are comfortable with. I'll start maybe going with the ones that we have here. Gareth had put a question. Devin, I don't know if you want to pick that one up. It was just interested to know how you're able to track actual claim and take-up impact following such a campaign.
Yeah, sure. So with pension credit, I've responded. We can see pension credit income in the administration data we use to target households. So that one is the most straightforward. It's the one reason why we talk about it so often. In other areas, like say free school meal take up, we sometimes need to connect with another data set that local authorities hold. So particularly can be a bit of a challenge when we're working at county level, because who's actually getting the free school meals is held at a county level, whereas the data to identify those who are missing out is held at a district level. But I think I see one of those advantages, and we've done this across Kent and a number of other county councils, is in bringing that county and district relationship together. So starting to make the most of their data together. So we're starting to be able to do that at I think we've done it in Coventry as well, which I think Ed mentioned, who was at. So we're getting those additional data sets to be able to track those impacts. And the final point there is we're starting to integrate open banking data into the Better calculator. So you can see people where they have agreed to share that with us. You can actually see the increase in income hit their accounts. provided the applications process quickly enough. So that's a really exciting development. Our goal is we reckon we already deliver over £1 billion worth of impact in terms of increased take up annually, but we can only show we can show around £200 million of that impact through Better Off and Lift. We want to really kind of increase that so you can verifiably, it's not just, I guess, we're seeing how much the horse is drinking just to really force that analogy home. And I think it really makes a big difference in terms of just, again, your case for funding the advice services that you deliver, as Ed was kind of talking about there. Looks like there are other meetings popping up. So if there's one or two more questions, Kristen, just fire them both at us, and otherwise we'll wrap it up.
Yeah, so Fiona had asked, just is the unclaimed benefits just for pension credit, or is there a list of other benefits?
Yeah, there's quite a few other benefits too. So I ran through a few there. Pension credit, free school meals. I think Healthy Start's also another important one. I was on a call with the Business Services Authority at the NHS about that last week. TV licenses. There's so many. There's such a big long list. I'm doing a terrible job of listing them out there. Bea, do you want to help me out a bit?
Well, I know in the report that I think we shared in the chat earlier, the 19 billion unclaimed, it breaks it down by benefits that we estimate the eligibility for that are going unclaimed. I know that one of our colleagues is also looking at the impact of that across different local authorities as well, but there's a breakdown in that report, and like Devin says, it's a whole host of benefits and other support across different social tariffs as well, which
by the way, just before we go,
well,
Gareth just said goodbye, but I think he's doing another talk on the Digital Leaders Week, so I think he deserves a shout out for his excellent questions. So if you are checking that out, Cash Perks or Gareth Evans will be doing a talk today or tomorrow, well worth listening in on.
Great, perfect.
I think that's all the questions answered. So if anyone thinks of anything else, like I said, I've left my email here. So feel free to get in touch and we'll get back to you with anything.
Yeah, and Sam, feel free to drop us a line. I mentioned at the top I was in touch with Will Gardner, but again, we've run this stuff at scale before. So again, I think the details are on there. So just drop us a line. Brilliant.
And then I think Digital Leaders are going to send the recording of this to everyone who attended. So
thanks a lot for I thought it was a really good discussion. Thanks for everyone participating either in the chat or vocally. Makes it a lot more fun.
Thanks
everyone for joining.
Take care. Bye.
Bye.